Currencies with Motilal Oswal. Kishore, hi. A pleasure to have you on the show. I want to start talking about the crude oil prices first, where we have seen nearly 2% of a decline overnight, down by 4% in last 1 week. But on a monthly basis, we still are 12% on the higher side. So clearly, there is various fundamentals working right now. While supply doesn't seem as much as a concern, demand clearly is. And what are you reading in those numbers?
Good morning, Manisha. I think, see, as you mentioned, that crude has got a spike after the production cut, and then from there onwards, it is looking for fresh triggers on the upside. So there are a couple of data points which are very interesting, especially the Chinese growth numbers. U.S. Hawkish data on the broader economy actually are positive factors for the demand. But also EIA report came up that the demand will be much better in the coming year. But at the same time, Russian oil continue to flow into the markets, which is actually keeping a lid on the prices. Second is the rate hike expectations of the Fed actually has jumped up in the last couple of weeks, which actually the markets were expecting a pause. Now I think a large amount of market is discounting a 25 basis point rate hike, and possibly there is a doubt or significant inclination of the market towards another rate hike in 2023. So that is actually keeping dollar buoyant in the markets, and that's actually keeping most of the prices of commodities lower. So which actually is the recent the last couple of days, especially the crude correction has actually been triggered by the strong dollar. Looking at the current market, probably I would like to say that it would be a range-bound market with not much of a price expectations. Probably the market will wait for the Fed to come out and say what is their stance. But till that time, the typical expectation for WTI would be 77, 78 on the lower side and 82, 82 and a half on the higher side.
Okay. How are you also looking at the natural gas prices now? Because the whole of winters passed away and we did not see the prices perform at all. And now as we are hitting the warm season, do you think the driving season, the air conditioning demand, the fact that we are looking at above normal temperatures, all of that looking to support price?
Yeah, so on the gas front, actually, there's not much of a buoyancy coming up actually. So yeah, I think I'm looking at prices to correct further lower even from here. Again, Russian gas is still available and Russian gas is still filling up the markets. So I'm looking at 2.15, 2.16 dollars on the global markets. So probably another 2.5% downside from here. It could be in the next week or so. So currently at this point of time, it could continue to fall down from here.
Hmm. You know, the factors that you mentioned about rate hike is something that seems to be impacting the base metal prices also. Last week was okay. I mean, the first couple of days of this week also saw some buying, but the last couple of trading sessions have not been so great. And every uptick actually is getting sold into.
Yeah, actually, see, base metals have been fundamentally supported by lower inventories, especially the copper has been supported by the lower inventories and also stronger broader economic numbers from China. Actually, looking at 4.5 GDP growth last quarter, actually China has actually blasted out on the base metal demand, but at the same time, rate hike concerns and that the Fed will make sure that economy would slow down and the inflation numbers are also not coming down. So actually that is actually putting a pull on the base metal prices. So at this point of time, yes, copper would look better even at current levels. So I would be looking at, if you are looking at a short term call, probably copper is a better bet for markets. Anywhere close to 768, 770 is a good buy. So we'll look for dips to buy. On the upside, 788 or 790 is a possible targets. So, but what happens is probably because of the rate hike concerns, the market might not move instantly, but definitely copper is a good bet to buy, especially backing on the lower inventories.
All right. And Akshay Tritiya is round the corner, and this is a time people do some token buying, if not big buying. And the only downside to this time around in Akshay Tritiya in India is that there is no wedding season surrounding it. So you wouldn't see that buying factoring in. But where the gold prices are, and the fact, Kishore, that last year on Akshay Tritiya, prices were at 50,000 odd. Right now, they're at 60,000 odd. So in matter of 1 year, we've seen 10,000 rupees per 10 grams of gains in gold prices. It's been a good return in last 1 year. Would you be looking at a similar kind of return in the next 1 year?
Yeah, Manisha, I think 60,000 is what we are seeing on the price. But if you go to a jewelry store, if you add the 3% GST plus another 15-20% of making charges, probably you're actually paying 75,000 plus for any 10 gram jewelry piece which you are buying. So that's extraordinarily expensive for consumers. That's where actually we are hit by the consumer footfalls are much lower at this point of time. So this time Akshay Tritiya could be interesting. But as an investment demand, people will still buy, as you already mentioned, there will be token purchases, could be, but large purchases I'm not expecting. On the price front, I'm not bearish on gold. Probably 1980, 1970, that's another $20-30 could be the downside. But I think every dip has to be bought into, and this rally is not going to stop anytime soon. And probably only thing is ki if the rupee goes to again 83, 84, probably you'll have a much higher beta in Indian prices. So 66, 68,000 towards this year end is not really long shot.
Okay.
Okay, all right, Manisha. Thanks very much for bringing us all of those updates in the commodity space. With that, it's a wrap on Halftime Report. Business Lunch will take over.